So there's been a fair amount of chatter about the Federal Reserve in recent weeks, particularly with President Trump making comments about Jerome Powell, the chairman of the Federal Reserve, and what he perceives to be poor economic policy from the Federal Reserve. I just wanted to set the table on what the Fed is in pursuit of, what their primary goals are, and how they are supposed to work in the framework of our economy. First and foremost, they are independent of the federal government, which is supposed to allow them to act objectively on what they believe is the best pursuit of action, regardless of who is in office. That's sort of number one. They have what's called a dual mandate, basically two goals that they are constantly in pursuit of. The first one is supporting employment as best they can, or targeting as low an unemployment rate as possible. They do that by making changes to interest rates, which I'll touch on in a moment here. The other mandate they have is essentially price control, so keeping inflation tamed, if you will. And they try to achieve both goals by making changes to interest rate policy. When interest rates are lower, generally that's a good time for businesses to be investing, borrowing money, et cetera, all of which are activities that should spur the economy, support hiring and employment. And at the same time, when the economy is growing very quickly, consumers are spending a lot of money, that is when you sometimes will see inflation creep up. And when that happens, they generally want to slow the economy down. So with what the tariff policy and a lot of what the Trump administration has rolled out so far on their economic agenda, there are worries that inflation could pick up if there are fewer goods, and the cost of those goods are increasing to the American public. There is some concern about what inflation might look like in the coming months.